Hey there, thanks for tuning in. Welcome to Investing in Germany. And today, let's talk about investing in Germany, especially now when Germany has reported that they are in recession. And secondly, let's have a quick look on how the German stock market is doing. And finally, what I'm currently doing in the stock market. So let's have a quick look on all these three topics. And before going into that video, I do request you to go ahead and hit the subscribe button. It will really help the channel to grow. And thanks for that. Let's go into the video. So what you're seeing here is the Germany GDP growth rate for the last 3 years. You can see that there are lots of ups and downs. But then what's really important for us at the moment is that the 2 consecutive quarters of degrowth, which means that we are in recession as per the textbook term. So in the textbook, it says that 2 consecutive quarters of degrowth means that the economy is in recession, is in pain, is in a lot of stress at the moment. So that is what the economic data is pointing out. But then if you're looking around you, you will see that a lot of demand is happening. There's no sign of any demand slowing down, right? You can see that people are going to the stock market, people are going to the supermarket, people are going out for dinner, out for food. And you can also see that a lot of people are now traveling for the holiday season in July. So everything looks very normal in Germany, but then the economic term says that we are in recession. So there is something really strange to see and strange to experience at the moment. You can also see the same happening in the stock market. So if you're looking here at the DAX performance index or the DAX index, which tracks the top 40 blue chip companies in Germany, so it should fairly give you how the stock market is doing in Germany at the moment, right? So if you look at the last 6 months when we were in recession, you can see that the stock market has done really, really well, like 12.80 uptick. So it's a really great capital gain for the 6 months, even outperforming any index fund for a long period of time. And if you're looking at the last 1 year, you can see that the average is also 22.6. So if you're looking at the long-term average of or any index fund, it will be around 10, 15. And here you can see the 22.6%. So it has outperformed any average at the moment. So market is really, really in a hot seat and everybody are going ahead and investing. And that's why you can see that the German stock market is doing really well. But then on the other side, we have the macroeconomic factors coming in and saying that the economy is in stress and the economy is not doing well. So if you see the last quarter or something like that, you can already see that there is some stress in the market because most of the companies in Germany or anywhere in the world, they are showing a lot of revenue growth. But then if you're looking deep into the P&L statement or the profit and loss statement, quarterly report and so on, you will see that the revenue growth is coming from the increasing in the price. It's not coming from the volume growth. It's not coming from the fundamentals of any company growth and so on. So everything is coming from the revenue growth, which is coming from the price increase because of the inflation and so on. So all the big companies, they are riding on the inflation and they are showing a lot of growth and so on. But then the underlying business is really under stress because the volume growth is not happening over there. And people are not really going ahead and looking at the details of the quarterly report and the balance sheet and so on. They're just going ahead and looking at the revenue growth. Yeah, let's go ahead and invest in. So that's what is happening currently in the stock market. And it will take some time before it comes to the normality because the companies, they cannot really go ahead and invest or increase their price for every quarters and so on. So once they reach the limit, then they will start to show the degrowth, and that is when the market will react very negatively. And we have to see if it is going to be really crash or it is going to be time scale average and so on. So there's a lot of things that can happen. Nobody knows what's going to happen. But what I can say here is that the stock market is showing a different thing than what the economy is doing. So this is really a strange situation in Germany. If it is not only in Germany, if you look at S&P 500, it is the same scene here. Last 6 months, you can see it almost 10%, and then 1 year you can see almost 17%. It has also done really well, even outperforming the long-term average of any index fund. So market is doing really well also in US and then also in Germany and all around the world because everybody are showing that increase in the revenue because of those price increases, because of the inflation and so on. So we have to really wait and watch when to invest in. From my point of view, the stock market is really, really hot and really expensive at the moment, even though the S&P 500 is showing really good sign here. From my point of view, S&P 500 is really, really expensive. Even there are some individual stocks, for example, Nvidia, that's crazy amounts like 200 PE ratio. There is no way that the company will be able to provide you such a growth to reach that 200 PE ratio. That is really, really crazy. Before going into the P&L statement, just a 200 PE is it's out of scope for me. It is not something for the value investors like me. Even Microsoft, which is a really, really good company, at the moment it isn't trading at above PE of 35. There's no point in going ahead and looking at the valuation of the company and so on. It's really expensive at the moment, and I'm not really going ahead and investing again in the expensive market. Of course, there are some companies which are fairly valued. I would say even really undervalued. So those pockets you can see, you can find some companies which are undervalued even in this really hot market. But then it is very seldom and it is very skim there. But then I would say that in the matter of time, the market will come to normality, come to the median, which means that the market will crash. Whether it is going to be a hard landing or soft landing, nobody knows. Even this brings me to the recent interview that Stanley Druckenmiller did, where he said that if you're giving free money for 1 year, people will do really stupid things. And if you give free money for 10 years, people will do really, really stupid things. So that is what we are seeing here. People are doing really, really stupid things because the last day or so, we had really cheap money available for us. So we don't know what the investment is because of the free money. Everybody were flocking towards the stock market and everybody are pumping up the stock market. Now everything is getting costly. So the cost of capital is going up, and therefore the number of stocks or number of money going into the stock market will slowly drain. That is when you will see that a lot of weak hands going out of the market, and that is the time to be in the market. So for my portfolio, I am not 100% invested in the stock market at the moment because there's a huge diversion between the macroeconomic trends like the GDP data and also the stock market data. So it is going in the completely opposite direction. So I'm not 100% invested in it. I'm investing in some pockets where there is a fair value or there is undervalued stocks, but then I'm also not going 100% into it because I'm expecting the market to correct a big time now. Maybe it's a matter of time. It can happen tomorrow. It can happen 3 months. It can happen even after 5 years. Nobody knows. That is why I'm investing slowly, but then I'm not completely investing in it. And it also really becomes a strange situation because if you know, people who have no idea about investing, they are making a hell of a lot of money by investing in Nvidia, for example. But then if the tide returns, and then they will feel the heat, and I will feel the, let's say, enjoyment of investing in the stock market when the market crashes. So that's what value investing is. When people turn greedy, just stay away from the market. If the people are becoming fearful, go into the market. So that's what Warren Buffett has told us, and I think I'm sticking to that. And I'm just waiting in the silence, slowly and partly investing. So let's see what happens, and stay tuned. Thanks for watching. See you in the next video.